let us understand about inter-source adjustment. Now, I told you in the previous video, please refer to the set off and carry forward of losses video, that there could be two situations. So what can happen is that in certain cases, what can happen is, let's say a person is having income under the head profits and gains of business and profession. So let's say you carry on two business A and business B. So BGBP is a source of income. Let's say you incurred a loss of 500,000 in business A and a profit of 600,000 in business B. Okay, so the loss is there from one source of income and there is a profit from the other source of income. So just keep this in mind, and now let us read the section where the net result for any assessment year in respect of any source falling under any head of income is a loss. So what happened in our case? In our case, what happened was we had a source business A, and the net result, which is the profit or loss for that particular year in respect of this business, is a loss. Now you can have this particular business as one of them. Okay, the assessee shall be entitled. So it is shall be entitled. You have a right to have the amount of such loss set off against his income from any other source under the same head. So what can you do here? What basically you can do here is that whatever is the loss that you have incurred in respect of any source falling under any head of income. So which is the source? The source is business A. Under business A, you have incurred a loss. You are entitled to set it off against any other income within that head. And what is the head? Head is basically your profits and gains of business and profession. So basically, this section gives you the flexibility that if in respect of any source of income falling under any head is a loss, the assessee shall be entitled to have the amount of such loss set off against his income from any other source. Now this is true for almost all the things. So let's say, suppose you had loss from one of the house properties and you had profit from the other one, you will be entitled to set off the loss from one of these against the profits of the other one. However, there are certain exceptions to this rule. And what are these? Let's see them one by one. The first one is a speculation loss. Now, speculation loss basically can be incurred in respect of a business that you might be carrying on. So let's say if business A was a speculative business, then the loss of this speculative business can be set off against B only if B is also a speculative business. If B is not a speculative business, then the loss of A cannot be set off against B. Okay. Second, revenue expenditure incurred on maintenance of horse races. So if suppose you are into the business of horse racing, then any revenue expenditure which you incur on the maintenance of such race horses can be set off only against the income from the same source. Meaning, if you have any income from the business of race horses, you can only set off the loss or the revenue expenditure which you have incurred against the income from race horses. You can't set it off against the normal business income. The third exception is long-term capital loss. So if there is a long-term capital loss that you have incurred, you can set it off only against long-term capital gains. Now what does this mean? Let's say you were doing a computation against this. So you have long-term capital gain 1 of 100,000. You have short-term capital gains of 50,000 and you have long-term capital loss of 150,000. Now this amount of 150,000, which is a long-term capital loss, can be set off only against long-term capital gain, which means that out of 150,000, I will be able to set off 1 lakh. The balance 50,000 loss which remains is going to be carried forward. You can't set it off against short-term capital gain or against any other head. Okay, so a long-term capital loss can be set off only against long-term capital gain. The last one is sources, the income of which is exempt. Now, if suppose you have some kind of an exempt income, let's say you have some dividend income. So if there is any loss because let's say you were engaged in the business of investing in shares and earning dividend income. Now we all know dividend income is exempt from tax, right? Now say some year you did not get any dividend income, but you paid the salary of the persons who were handling this business and you had a loss. Such loss cannot be set off against taxable income of any other source. So that will go waste or it will be carried forward. You can't set it off against any other head of income.